Edelweiss focused equity fund NFO. Will this NFO add return to your portfolio, or what kind of risk this NFO can add to your portfolio? Let us analyze and evaluate. Hi, this is Ramalingam. We help individual investors like you to take the right financial and investment decision. Before we analyze and evaluate this particular Edelweiss focused equity fund NFO, let us understand some key attributes of this fund. It is an open-ended equity fund NFO. The NFO is opening on July 12th, and the end date of the NFO is 25th July 2022. After this NFO period is over, again the fund will reopen for regular purchase and repurchase. The investment objective of this fund is to generate a long-term capital gain by investing in equity and equity-related instruments of up to 30 companies across market capitalization. This fund has got the flexibility to invest across large, mid, and small without any restriction. They can also invest across all the sectors. The only restriction this fund has is they can invest a maximum of 30 companies only. Minimum investment is just 5,000 rupees in this fund, and there is no exit load if you are withdrawing after 1 year. Before 1 year, there is an exit load of 1%. The benchmark of this particular fund is Nifty 200 Total Return Index. Though the benchmark is Nifty 200, it is not necessary for the fund to select stocks only from Nifty 200 index. They can go out of this basket, this index, and also choose stocks. What is focused equity fund? A focused equity fund is similar to flexi cap, but flexi cap can invest up to any number of stocks. But here they can invest in any capitalization without any restriction on the weightage. They can also invest across sectors without any restriction, but they can invest only in total 30 stocks. They can't invest to more than 30 stocks in this fund. The fund is managed by Triti Bhattacharya and Amit Vora, and there is no entry load in this. The investment strategy of this fund is going to be simple: concentrated portfolio of stocks, maximum 30 stocks, no restriction on the market capitalization, right? So concentration is like at times it is good. 30 stocks itself is enough diversification. Going more than 30 stocks at times can bring over dilution to your portfolio. Over diversification can result in dilution of returns. That way, 30 stocks is sufficient. The scheme will follow a bottom-up stock selection approach. What is meant by bottom-up stock selection approach? They will first select good companies, and they will analyze which industry or which sector they belong to. Is it the market condition is favorable to that particular sector? They'll analyze later. The other approach is top-down. Top-down is like they look at what are all the good performing sectors where the outlook is brighter. There they will pick and choose the best stocks. This is top-down. Bottom-up is first choose the stock and then look at the sectoral outlook. Bottom-up is fundamentally a strong selection approach. That way, this particular fund is paying attention to this particular strategy of bottom-up stock is a positive sign. This fund can invest across market capitalization without any restriction, 100% flexibility. They can also invest in multiple sectors without any restriction. Weightage is given to large cap, mid cap, and small cap when they allocate initially. Later on, anytime they can change the allocation. If the outlook for large cap is good, they can have higher exposure to large cap. If the outlook for small cap is good, they can have exposure to small cap. They can also change it later from large cap to small cap to mid cap weightage, they can change it. Similarly, sectoral allocation also they can change it. If the technology outlook is good, they can have higher exposure to technology. Tomorrow, if the outlook becomes poor for technology and the outlook for FMCG becomes brighter, they can change it. Long-term capital growth potential, because it is an equity fund, it can't deliver you any returns the short run. They may deliver, but we can't be sure of generating short-term gain. So if you have long-term money, this fund can give you better return in the long run. When I say long run, it can be 7 years plus. Because 30 stocks without any restriction, they can invest in large, mid, and small across any sectors. Better diversification is possible. Can take advantage of the market cycle and move between one capitalization to the other capitalization, move between one sector to the other sector. It is possible for this fund to do. This fund has got the potential to deliver inflation beating return in the long run. Long run can be 7 years plus. What are all the potential demerits? When we did an analysis on this particular NFO, we had some negative observations. This fund is not suitable for short-term investments, can be huge risk in short term. This fund is not suitable for a conservative investor. For a conservative investor or a beginner investor, they have to start with large cap funds. This fund, it's a focused fund. This fund has got the potential to invest in mid cap and small cap also. That way, this fund is not suitable for a conservative investor. This fund doesn't have a portfolio. There is no portfolio for this fund as of now. After the NFO period is over, with the collected money, they'll start building the portfolio. Because there is no portfolio given, we can't do any analysis. If there is an existing portfolio available for this fund, most of the ongoing funds have the portfolio, right? We can analyze what kind of sectoral allocation, what kind of capitalization allocation they have given. Then based on that, we can analyze and take calculated risk. It is not possible with this NFO. And one more way of doing calculated risk analysis is checking the past track record, how these funds have delivered returns in the past, during the market fall, market correction, pre-election, post-election, during recession, during war-like situation, how this fund has delivered return, what kind of ability the fund manager has to manage the crisis, what kind of risk-adjusted return this fund has delivered, how they are doing well when the market is going up, how well they are restricting the downfall during the market crash. All these analysis we will be able to do it if the fund has a track record. This fund is not having a track record and also not having a portfolio. That means we have to take risk blindly. We are not able to take any calculated risk here. Whatever the risk we are taking, it is completely a blind risk. If you are a conservative investor, then you must avoid this fund till it creates a good, stable portfolio with a reasonable amount of track record to do some basic analysis. If you are a beginner investor, then in that case, you can choose existing focused equity funds with good track record and good performance. You can choose instead of choosing an NFO where there is no track record or portfolio. If you are an aggressive investor who has an experimental mindset to invest in NFOs, then I would suggest you to invest a minimum investment in this fund and experiment. You should not invest your money which you are setting aside for goals. You should not invest because you are experimenting here with short-term or medium-term goals or long-term goals you have got. You should not experiment with this fund. You have enough money to meet all the goals. In addition to that, you have got additional money with which I can experiment. Then in that case, you can take risk and invest in this NFO on the experimental basis. Your financial planner only knows your complete picture. Your financial planner only knows your complete picture. Your financial planner has the complete financial roadmap for you. Where are you financially with your assets and liabilities, where you need to go over a period of time, because he is the one who has created a navigating plan for your financial future. So he will be able to understand what kind of risk you have to take there, whether this particular fund fits in, is there any overlap, or any other fund is suitable, he will be able to judge. So that way, consult your financial planner or any other investment expert to whom you trust. You can consult before taking a decision. If you have any questions on this fund or any other investment options, feel free to book an appointment with our certified financial planners. You can discuss with our certified financial planners by booking a free appointment on achieving financial goals or wealth creation process or investment techniques. To book a free appointment, the link is given below this video in the description box. Also, we regularly organize insightful investment webinars to educate investors. We do this with eminent investment experts. The link for booking your seat for the next free webinar is also given below this video in the description box. You can click the link and just leave your name and email ID. We will book the seat for the next insightful investment webinar. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.